giant iron ore mining company BHP's profit has fallen about 4% to $11 billion in the latest financial year. Revenue fell about 3% to $60 billion, and that was due to lower prices for both coal and oil. However, this was partially offset by higher iron ore prices during the year. The benchmark price for iron ore averaged about $93 a tonne for the year for BHP, and that included freight costs to China. BHP expects China's demand for iron ore to fall by the end of this year and global steel production to fall as well. The total impact of COVID-19 on BHP's operations was about $482 million due to lower mining volumes, temporary shutdowns and additional costs for staff, such as temporary relocation, screening and hygiene. And BHP today also confirmed it's now seeking to exit its thermal coal assets. That includes the Mount Arthur mine in New South Wales, the Cerrejón mine in Colombia and the BHP Mitsui coal joint venture in Queensland. It will pay a dividend of about 76 cents per share, and Sky News business editor Tikki Fullerton will be speaking to the Chief Executive Mike Henry a little bit later today. Moving to the banks, Westpac has become the first major bank to opt not to pay an interim dividend. It's warning of a highly uncertain outlook in its current third quarter earnings update. The bank's third quarter cash earnings are about $1.3 billion, and it's flagged an impairment charge of $826 million for the quarter. It also provided an update on deferred mortgage repayments, saying they've dropped by about 40%. Westpac says there are 78,000 mortgages worth $30 billion are currently in deferral, down from a peak of about 135,000 mortgages or $51 billion worth of home loans. The bank also today released its latest economic forecasts, with GDP growth expected to end the year down 4% and property prices to fall this year by about 10%. And also today, supermarket giant Coles has reported a close to 32% drop in statutory profits to $978 million. But this was due to the supermarket giant accounting for some earnings it lost when it demerged from Wesfarmers in 2018. Excluding these accounting anomalies, Coles' profit after tax was up 5.7% to $951 million, and that was obviously driven by higher strong food sales growth during the year. Sales revenue jumped almost 7% to $37.4 billion, and its earnings before interest and tax grew 4.7% to about $1.4 billion. Coles also says in the first 6 weeks of this new financial year, supermarket comparable sales remain broadly in line with the levels achieved in the second half of FY20. Online sales are up about 6% over that period, and that's all due to people in Victoria buying their groceries online. Coles will pay a final dividend of 27.5 cents per share, and I'll be speaking to the Chief Executive, Stephen Kane, a little bit later today. As for the stock market, Danica, the ASX 200 is up about 0.3% at the moment.